Welcome to the next lesson about compression and liquidity graphs. To be honest, these are my favorite ways to see the incoming potential setup. And there are some patterns I use. I could say there are three patterns, two for liquidity graphs and one for compression. It just gives me confidence that not only the price is inside some zone, so I can focus on footprint charts, but the way how the price is going to the zone also matters. It gives me better self-confidence to take this setup. And these are the patterns. This is a very specific way to fill the orders, not just price going to the supply with higher highs, higher lows, higher highs, higher lows, etc. When I see the pattern, I am more than happy that there is a high probability that I will not lose on this setup. So this is just one of the parts from my entry criteria. So what I believe is that the market is always going to the price levels where the biggest orders are sitting, the limit orders. And then aggressive traders need to confirm if they want to follow the intention, the direction of the limit orders. So about passive and aggressive orders I will, and overall absorption as well, I will talk in the next two lessons. But what I mean here, when I see the resistance, I call this equal highs, below the well-defined supply based on the real volume tools or the volume profile, I'm not trading the double top. This is the retail way. In some situations I am also a retail trader. I have not millions in my account. But all the retail courses for the beginners love to show you the double top or double bottom patterns. But for me, with my knowledge and experience, it is very logical that the big institutions knows this. They know how the retail traders use the basic pattern because retail traders is the biggest group of traders. Every month, a lot of new people joining the market, joining the new courses and trying to trade with EMAs, RSI, MACD, all these basic indicators and looking for basic patterns. And, I even seen some big books of patterns, how the candle need to look like. But the most popular is double top, triple top, double bottom, triple bottom, and all the break of structures, break of retests patterns. So when I see something like this, it's more than likely the price will go up. Of course, sometimes the retail traders win the market and the price is truly making double top, reacting with resistance and then falling down. But I am patient, yes, I am the trader who can sit on my on my hands and wait for what I want to see. So it's easy to define a resistance or support and just wait to see the price in the zone. So the move to the zone after finding the resistance and support is called liquidity grab, because it means that high chances that some big players really placed orders above or below that area. And it's to make a panic. This is how I understand this. Because if someone is selling because found a resistance and double top, the price then is reversing to go to our zone, which is invisible for the most of traders using simple patterns. And price is reversing, so like break and retest. So they want to probably make the losses back. Yeah, so I'm buying now. But they don't know the the logic here behind this scene, and they will be kicked out for a second time, because this is not a buy setup as a break of resistance to make it as a support. This is a liquidity grab to fill the final big orders, and it's just matter of time to see the aggressive traders. So there are two types of entries: the aggressive and conservative. Aggressive is when we could see the break of the imbalance or high volume part of the candle, because that could mean that really limit order got filled and aggressive sellers confirmed the intention. So after breaking some imbalances and or high volume levels from that particular one last final candle, it's a good setup for me. Yes, I'm more aggressive trader than conservative. I'm catching directly what I see. Yes, I see potential liquidity grab, aggressive sellers coming. I'm joining the market with them. But the lower risk and setups, more conservative way, is to wait for not break of the buyers, but to react with the sellers. Yes, the sellers by confirming the intention need to be strong enough to break that area of resistance where every retail trader was manipulated. So they also need to make a big pressure. So then it is good to wait for a retest of that area, because probably more sellers want to join in this price level. So exactly opposite to find the buy setups. And the third pattern is compression. Very specific move. I will show you this later on the how it looks on candlestick chart. And I call this zigzag move. So going shiny to the zone with decreasing volume, and then is the boom final move because some order got filled inside the zone. So let's start with the liquidity grab to the demand zone. I hope you can clearly see here the support. Price is bouncing from the same price level, so it's creating the support but above our well-defined demand zone. So then comes the liquidity grab, hard push to the down for a fast reversal. So the aggressive entry could be after breaking that imbalance from liquidity grab candle, or waiting for a retest from the buyer's imbalance. The buyers needed also be aggressive enough to break that support again. So then it's leaving the imbalance, which means there were more buyers, definitely more buyers than sellers, or just really high volume in this part of the candle. So by waiting for a retest, it's the more conservative, safer entry. And about entries, we'll talk on the after the footprint chart part, because for me the footprints gives the final confirmation, not only price action and the way how the price is going to the zone, but the footprint need to shows me some specific things. I have my very specific entry criteria to join the market in the safest possible way. This is just the pattern. When I see that way price is doing above demand, I'm more than happy that this will be a good setup. Another example, very hard move. I believe that there were the news, some red folder, but also right above the demand, price created a support. Yeah, it was sitting on a level. Again, liquidity grab, aggressive entry could be right after breaking this imbalance. So, and this one candle, at the closure of the candle. 99% of my time, of my setups, I am waiting for the last seconds of the candle. This is something important for me, very important. That I'm not doing limit orders. I'm just reacting, yeah, but waiting with patience to candle closure. Because the fact that candle is rising doesn't mean that it will really break some previous levels. It can rise, fill some orders and come back down, and you are already in drawdown. So to minimize the risk of failure or being in drawdown, I'm always waiting with patience for this period of time. Closure of 1 minute time frame or 5 minutes, depends on which time frame I choose on my footprint chart and how aggressive I want to enter. But I don't use limit orders or going like I'm watching the M5 price action, but after 2 minutes I'm already in. No, I'm not doing this. And what? More conservative entry here, the safer, after retest of the imbalance. In this case, there was probably the highest possible volume here to make such a shot, because if that was a news release, the first big buyers were already prepared. Yeah, so they joined after closure of this one candle like seconds before the news. So retest of this to make a safe entry. And then some liquidity grabs to the supply zone are, yeah, the opposite. Couldn't be different. Here in this scenario, there was small, maybe not that clean resistance as equal highs, but here we have a very nice, good-looking double top. And imagine that you are a beginner and you see such a candle, such a bearish candle, here, nice rejection. So, in my opinion, high probability that it could be a sign to join the sellers, because we have resistance, double top, rejection, bearish move. Yeah, okay, I'm in, I'm placing my stop loss above. So I think that institutions are smarter than we all, and definitely their algorithms as well, and they're placing orders above, yeah, to hit these stop losses, to manipulate these people. And again, yeah, if we had here reaccumulation, so looking for another supply, price is going here for distribution, and we see the very hard move up and back down. There's all the imbalances from the liquidity grab. Here were stacked imbalances. I would enter aggressively after closure of the candle which broke everything, and set my stop loss above the candle which I think is the liquidity grab, the final one. Yeah? Because if price will go higher, it's nonsense for me to hold the trade if all the potential imbalances or potential limit orders is broken. Yeah? If price is above this, nonsense to put the stop loss higher, higher and higher, just above the candle which left the imbalances, which the candle we believe was the trigger. Yeah, the sell limit orders were exactly here. I hope you understand my logic. So no reason to put too high volume, too high stop loss. In this scenario, I would need to accept the big drawdown almost to hit my stop loss. But the logic was here. Yeah, these imbalances held the price, and then when was the break of structure, break of this low, was another imbalance, this time bearish imbalance. So in this candle, not here unfortunately, but later on, the aggressive sellers confirmed the intention of the passive sellers, so they broke the structure and moved the price down. And then on retest was the right moment to join the market in a safer way. So again, aggressive right after breaking the liquidity grab candle, and conservative on the retest of the bears, of the sellers. Let's see another example. Yeah. Also, nice resistance. I call it equal highs. Yeah, still same price level. Price is bouncing. This also look like here and here like a double top for shorts. Maybe even someone could think that this could be the head and shoulders pattern. Yeah, here's the shoulder, head. People try to see a lot of things on the charts, but better to trade facts and use the real volume. This is my way of trading, and it's profitable and it's really well working. So again, if you see the range, it could be the last reaccumulation in this case, to see the market manipulation. So price going up. In this case, I would take a loss, yeah, because when I found liquidity grab to the zone and broken by a bearish candle, so in my opinion these could be the aggressive sellers after liquidity grab, I would join in the closure of this candle and set my stop loss above. So with all honesty, I am not winning all the time. Everyone's losing money. It's the part of this job. We cannot be right the 100% of time of setups. But if I would use the safest possible stop loss, like above the zone, I would be still in. But I am aggressive trader. When I think that something is filling the limit orders, I don't need, with my logic, to use bigger stop loss, because if price is going above, it means that it still wasn't ready. The price was not high enough to invite sellers. And so that setup was very unclean, especially later when the aggressive sellers confirmed the intention of making this bias short. They left an imbalance, but without retest. Yeah, so the safer conservative traders would miss the trade and the aggressive would lose. Something happening. But the logic was here, yes. It was waiting for a liquidity grab because finding the resistance. Then the compression, yeah, the final pattern, which I also love to see, not just waiting until reaching the demand by a simple lower lows, higher lows, not higher lows, lower lows and lower highs. But when I see such a triangle, yeah, the zigzag move with indecision candles, I expect to see the final push. I call this final push or final move to the zone for a reversal. So very similar to the pattern of support. It's just prices doing something before the final filling the orders. In this case, buy limit orders. So passive buyers. Here maybe this triangle looks even better. Yeah, so zigzag move, closer and closer with decreasing volume to the zone for a boom, final push and then reversal. These patterns are beautiful, giving me really amazing high self-confidence. So liquidity grabs from equal highs and lows and the compression. Let's see the pattern going to the supply. Also very nice, yeah. Zigzag move for a final push, even better, because in this scenario was also appeared the double top. Yeah, so high probability that above this were limit orders. And when price is going with compression to this, so there are two patterns in one setup. So beautiful, yeah, that is giving the confidence, and maybe that's why the price moved down so fast. Big, huge move down to the previous equal lows. And what we have here also, the specific zigzag move as a compression to the supply. I love this pattern, guys. Really, seeing this is that, oh yeah, I am almost ready. The price is not just in the supply, but it came in this specific beautiful way. So the price was preparing to fill the order and run away. This is beautiful, and it's working very, very well. And what I'm trying to avoid, even if the price is really reacting as we expect, is the incomplete compression. The price here also started to doing the zigzag move with a lot of indecision candles and slowly going up with decreasing volume, and then, oh, not this, not this key, it's the missing final move. I would wait for this. So even if later price starting to go down, or even bigger wave down, I would leave this setup, because it's without this one particular candle. I need this to see. Yeah, for me that it could be nice entry. I see still in our group also people that are using this because maybe here was some imbalance, or price left the small supply. Yes, we have indecision candle and leg out, which broke the structure, and then price just reacted back. I love to see this. I am very picky trader, aggressive but picky. I'm taking small trades but with amazing consistency. I'm catching trying to catch all the time 2-hour setups, not like years ago 5-hour, 7-hour or 10-hour setups. I am no more trader like this. Maybe I'm just more mature, I'm older. I'm almost 40 years old. I'm not making any show up, any circus with sharing my big results. I stopped with this maybe a year ago, long time ago. Anyway, so I'm very picky. I respect money because, as you know from the introduction video, I was working in the really hard places. I respect every penny, every cent, and when I want to join such a dangerous place like market, I need to see all my criteria. That's why I'm always mentioning that entry criteria is something like your Bible of trader. Yes, this is your own words, your own rules. You wrote this, you signed this, and you should listen to yourself. So if I don't see my last push, I am not looking for anything, even if footprint shows some absorption for some reason here. No, I need to see my pattern. Oh, okay, talking too much, 25 minutes almost. Thanks for watching. The next lesson is about footprint charts, finally.